the only way forward for gold is upwards. And most of this has been driven by the expectation that the U.S. Fed is going to cut rates this year by at least 3 times, with the earliest cut in June. So there is the expectation that gold's characteristic as a non-yielding asset is going to be more attractive to investors when bond yields go down. So there's that. But also for the USD, yes, it's not just gold, for commodities in general as well. We have seen a boost thanks to the weakness in the USD. Now the USD, the DXY is at 103 in 2022 and 2023. The highs were way higher than 103. This year we expect an average of 101 for the DXY. So that is definitely going to be supportive for gold.
So how supportive? You know, we just hit 2222 record high. How much more upside is there?
I'm telling you, there's more upside.
Yeah.
There's definitely more. Once the Fed actually starts cutting rates, then we'll see gold propelled even higher. So this year is a year for highs. At the same time, we have elevated geopolitical tensions, and gold thrives on uncertainty. Gold thrives on risk. We have the Israel-Hamas conflict. We have the Ukraine war still persisting. We have a number of elections this year. There are tensions at the Red Sea. So definitely the way forward is upwards for gold.
Okay. So in many ways, Sabrin, does it feel like gold can win even in an environment of upside inflation surprises as a hedge against inflation?
So that would be a slight weakness for gold, but the other factors that I have mentioned would it would be better for gold. They would underwhelm the inflation aspect. But even then, inflation remains sticky till date. There are a lot of moving parts to the story going forward. If inflation doesn't ease as much as we expect, then the Fed might not cut rates as much as the market expects, or they might even take on a hawkish role. Even though last night's meeting, it looked like the Fed was pretty relaxed about inflation. So there are a lot of risks to gold prices going forward, but the core view remains that it's upwards for now.
So let me push you on a level here. We were talking offline a couple of seconds ago before we went live, and you were telling me the average spot price right now so far this year is about a little over 2,050 a troy ounce, right?
Yeah.
How much more upside do you think?
Yeah, so the average thus far in the year to date for gold, the XAU, it has averaged around 2,057, 58. Okay. So for the rest of the year, right now, we're expecting $2,100 an ounce for gold. So that means there's more upside than what we have seen this morning. But at the same time, gold is likely to reach even higher highs. So the range that I'm expecting is close to 2,250 to 2,300. But the more of this upside will come in the later part of the year when the Fed actually starts cutting rates. So
2,300?
Yeah.
Wow. Okay.